So Philip, China's Black Monday. David Stubbs from JP Morgan, as reported in the FT, said what we're seeing is not a reasonable correction. We're definitely in the worlds of psychological downturn and real concern about the future. So Philip, how accurate would you say this is?
Then we've obviously had a very large fall in the Shanghai Stock Exchange over recent days, 15% over the past few days, 25% down in the last 2 weeks. Is that reasonable? Well, when we put it into context of how far it's gone up over the last year, and share prices are still up about 35–40%, what we've seen in the Chinese market is just overextended itself. And I don't think that's been on any economically rational ground. It's a different beast of a market in China. It's more of a retail market. There's more retail investors in there. A lot of the big players aren't in there so much. It's not like the Dow Jones. It's not like the FTSE, for instance. But it's certainly a big fall. It will be a worry to the authorities in China. They'll be looking at the potential financial outfall from it. But on the other hand, I think it's come a long way. It's gone up very fast. It's come down very fast. In terms of the other exchanges around the world, in the West, the Dow, the FTSE, it's fair to say that in the past they've overextended themselves. They've had a lot of QE pumped at them since the global financial crisis. That has supported global markets for a long, long time. And it's not too surprising to see them come off a little bit. Obviously, they're coming off faster than one might like at the moment, but as we've seen this morning, a little bit of stabilisation on the European bourses.
It has been said in the past, when the US sneezes, Europe gets a cold. How heavy an infection can the EU, Africa, and indeed the US expect from this Chinese virus?
In terms of the direct growth slowdown at the moment, I don't think we're anywhere different than we were 3 months ago or so. I don't think anything fundamental has changed. So whatever investors were thinking 3 months ago, I'm not sure what's changed their mind now. There is a risk that the financial markets overshoot. They probably already are. They've fallen very sharply in China. They've obviously fallen very sharply across the rest of the world. There is a danger if they continue to do so that we get into this downward spiral, and that's a very downward spiral that could lead to contagion around the world. There's a big risk that it could spread, and already is spreading, to other emerging markets as well, and maybe that's a bigger danger too. But I think at the moment, in terms of the actual direct impact on, say, US growth or European growth, I think that's relatively limited. In terms of African growth, maybe the hit there is a little bit more, and that depends in terms of how much money China is still willing to invest in African nations while all this turmoil is going on around it.